Hey, what's going on, everybody? This is Cameron with Kinley Accounting, and you know what? The people have been asking for it, so we had to do another series, and this one is the How to Lower Your Tax Liability series. Okay, so let's talk about this. I talk to people every week, different leads, different prospects, buddies, referrals, and they're always like, "Oh man, Cameron, I want to lower my taxes. I don't want to owe a lot. You know, I owed a lot last year and I made even more money this year. I don't know what to do. I don't want to give the IRS all of my hard-earned money." I got you. I heard your cries. Your boy came up with some steps for you. All right. So in this video series, we're going to talk about three things: how to minimize it, when, and different ways that you can do so. So this is the first video. We're going to talk about when to minimize, because I always hear a lot of people like, well, I can hold off. I can wait. It's no big deal. You know, it's not urgent right now. I can push it off. And what they think is that, hey, on March 15th, March 30th, April the 1st, I can just, turn in everything and they're going to do magic. No, what your tax preparer is going to do is what we would consider the basics. Yes, we know tax law. We know the deductions about, meals, advertising, mileage, home office. That's what we would consider the basics. That's not enough to truly put a dent in the amount of taxes you owe. Will it help? Of course. But the best time to minimize it is in that current business year. So if we're in 2021, by December 31st, you need to be ready to rock and roll. You need to have met with a tax preparer and be able to plan ahead and say, hey, I think I'm going to make this much. I think my net income is going to be this much. What can you tell me? What direction can you aim me so that I can be prepared for that tax bill? I tell people all the time, hey, we don't want to wait till January 31st. It's too late. Most business owners are on cash basis, not accrual. And all that simply means is when you get paid the cash or when you pay the cash out the bank is when it counts. So we can't on March 15th just start coming up with different expenses and income to try to mess with your taxes. It's too late at that point. The books are closed. We're in a whole different year. So if you come to us, any tax accountant, tax preparer, you have to do that before December of that current year is over. That gives us the flexibility to not only help you and assess everything correctly, but then to give you the guidance you need. Hey, you need some financials because you don't know any of your numbers. You're guessing. Maybe after we get numbers and financials put in place for you, we see different opportunities. Hey, maybe you can invest in a Roth. Hey, maybe you can put something in this safe financial instrument that will save you money. Hey, you didn't know that you technically were at a loss, so you're good. Hey, you didn't know that you made this much or netted this much, so we need to prepare and start putting taxes to the side or start paying in estimates. But we can do that in the current business year. If we wait till that next year and it's March 31st, first off, all your tax preparers are going to be swamped. Number two, they're going to have to charge you a lot of money to hurry up and try to do all the prior year stuff. And three, it's too late to do any of the magical stuff that you're really wanting, but you don't know that you want. You see what I'm saying? So when is the best time to minimize? Today. Start right now. If you're a marketing agency, you need to start having your accounting in place now, and it's going to start telling your story. It's going to tell you how much you're making, how much you're spending. Then a great accountant like us, we would start projecting, hey, you know what? It's September. These were your numbers. So, if we project these out for 3 months, we think you'll end up around here. Do you have enough money and cash set to the side to be able to pay a tax bill like this? No? Well, we need to come up with a strategy for that. See what I'm saying? So don't wait till the last minute. Don't think that your tax preparer can just do magic. No, they're going to do the basics because you're coming to them at the last minute. They're being reactionary instead of being proactive. All great accountants are proactive. Say it with me. All great accountants are proactive. All right, so hopefully you love this video. We have more coming to you in this series. If you have any questions, feel free to send me an email at cameron@kinleyaccounting.com. Go to our website, kinleyaccounting.com, where we have so many different free resources. If you have accounting in place, you've been doing it on your own, you're not sure, we'll look at it for you. We'll do an accounting diagnostic review. Let me say that again, accounting diagnostic review, and we'll look over it for you and be able to break it down and say, hey, these things are not right, and if you don't fix them, they're going to cost you over here in the tax world like this. So we're here to help you. Hopefully you guys are going to love this series. We got more videos coming. I'm excited to share this information with you because I just want to help you. I don't want you to pay that money. I don't want you to just save money. I want to help you to make money.